The average tax refund this year is $3,800. That hits your bank account and you feel rich for about 48 hours. And then, I've seen this 1,000 times. Life happens. A dinner here, some online shopping there, that thing you've been wanting, and 6 weeks later you're like, where did it go? I've worked in accounting for 20 years, watching people get refunds and watching them disappear. Today I'm giving you the playbook so yours actually does something. Let's get into it. First, real talk. A tax refund is not free money. I know it feels like a gift. I know the notification hits different. But here's what actually happened. All year, your employer took extra money out of your paychecks and sent it to the IRS. The IRS held it. Didn't pay you interest. Didn't invest it for you. Just held it. And now they're giving it back like they did you a favor. This isn't the government being generous. It's your own money coming home, which means treat it like the paycheck it is. Not a windfall. Not Vegas money. Your money. Now let's put it to work in the right order. Before anything on this list, if you're behind on rent, you've got a utility shutoff notice, or you have a medical bill in collections. That comes first. Full stop. Financial holes compound. A $200 late fee becomes a $400 fee, becomes a credit hit, becomes higher interest rates on everything else. Plug the hole first, then move to the rest of this list. If you have credit card debt, this is almost certainly your best move. Here's the math, and I need you to actually hear this. Paying off a credit card at 24% APR is the same as getting a guaranteed 24% return on your money. There is no investment, not stocks, not crypto, not your cousin's business idea, that reliably returns 24% a year. Paying off that debt is the investment. So if you've got $3,800 sitting in your refund and $3,800 sitting on a credit card at 24%, pay it off. Tonight. The math ain't mathing any other way. Exception. Low interest debt, car loans at 4%, student loans at 5%. That's a different conversation. But credit cards? Gone. Once the high interest debt is handled, your refund's next job is a cushion. 3 to 6 months of essential expenses in a high-yield savings account. If you don't have that yet, your refund is the jumpstart. $3,800 could fully fund a starter emergency fund if you're living lean. And right now, high-yield savings accounts are paying around 4 to 5%. So that money isn't just sitting there, it's actually growing a little. I've got a full video on exactly how to build your emergency fund. Link in the description. The short version: open the account, put the money in, don't touch it unless the car breaks down or you lose your job. That's what it's for. This step matters before you invest because if you start investing with no cushion, a real emergency will force you to sell at the worst possible time. Build the floor first. Okay, debt handled, emergency fund solid. Now we invest. And there's an order here that matters. First, make sure you're getting your full 401k employer match. If you're not, increase your contribution now. That's free money you're leaving behind every paycheck. Second, fund a Roth IRA. The 2025 limit is $7,000 for the year. Your refund could cover a significant chunk of that, or all of it. Tax-free growth. One of the best moves regular people can make. Third, back to the 401k. If you've maxed the Roth and still have money, increase your 401k contribution further. Fourth, brokerage account. If you've maxed everything else, open a regular taxable investment account and put it in low-cost index funds. Now, here's the stat that should make you put down your phone and open an account right now. $3,800 invested in a Roth IRA at age 30. Left alone. 7% average annual return. 35 years. That single deposit becomes approximately $38,000. That's one refund, 1 year. Do that every year and you're looking at life-changing numbers. Okay, I've worked in accounting for 20 years, not a robot. If you followed steps 1 through 4 and there's still money left, spend some of it on something that actually brings you joy. A trip, a concert, something you'll remember. Money is a tool. The goal isn't to have the most money at the end, it's to use it well. Rewarding yourself for making smart moves is part of staying consistent long-term. Just cap it. 10 to 20% of your refund max. The rest does the work. Here's the mistake I see every single April without fail. The refund hits. People say, I'll figure out what to do with it later. And then life happens. A night out, a few Amazon purchases, something for the apartment. And it's gone. Without a plan. Without a single dollar going somewhere intentional. The fix is simple. Decide right now. Before it arrives. While you're watching this, pick your step one. Write it down. When the deposit notification comes, execute immediately. Don't wait 24 hours. Pre-decide. The money does what you planned instead of what feels good in the moment. All right, the full playbook one more time. Handle any financial fire first. Obliterate high-interest debt. Build your emergency fund in a high-yield savings account. Invest. 401k match, then Roth IRA, then 401k, then brokerage. Spend a little on something real. You earned it. Decide before it arrives. Execute when it lands. If you want to go deeper on the 401k or the emergency fund, I've got full workshops on both. Links in the description and right here. Subscribe if this was useful. I drop these every week and they only get better. See you in the next one.